Good morning and welcome to the Top 50 Insurers Underwriting Under the Microscope webinar, brought to you by Insurance Data Lab in association with Insurance Times. I'm Yanis Katoulis, acting editor at Insurance Times, and today we'll be taking a look under the hood of the recently released 2023 version of the Insurance Times Top 50 Insurers report. Alongside my expert panel, we'll be discussing the key findings of the report and exploring what it takes to be a best-in-class insurer in the current day. So, just before introducing the panel, a couple of quick points. We have a Q&A function today, so don't be afraid to send in questions for the speakers as and when you think of them. We'll try and leave some time for Q&A at the end, but I'll try and weave your questions into the discussion as we go as well. Insurance Data Lab will also be publishing a link to watch the recording of the webinar, so don't fret if you need to run to the door for the postman and miss something. So, with that done, let's get started with some introductions. First on the panel is Insurance Data Lab's Matt Scott. Matt, would you like to introduce yourself and your involvement with the Top 50 report?
Hi, Hi, Yanis. Thanks. I'm one of the co-founders of Insurance Data Lab, and for the past 3 years, we've been providing the data that underpins the Top 50 Insurers report. And I have a history of the of the report going back beyond that, when I used to write it when I was at Insurance Times as well. So been involved in this for a while now. Great, thanks, Matt. Anna, would you like to also quickly introduce yourself?
Hi, good morning, everyone. Hi, I'm Anna Fleming, and I'm the interim CEO for AXA's retail business, and I'm delighted to be here today.
Great, thanks for joining us, Anna. Hugh, would you also like to give us a bit of a rundown of your position and expertise?
Thanks, Yanis. My name's Hugh Evans. I'm a partner in the insurance practice at KPMG UK. For many years before that, I ran the Association of British Insurers.
Great, excellent. So we've got all of our introductions done. Thank you for joining us, everybody. And let's get into the main course of the webinar. I want to start with you, Anna. Firstly, congratulations to AXA on maintaining its position as the #1 insurer in the Top 50 Insurers report. From that perspective, how do you see the market at the moment, or what are some of the challenges AXA has been facing?
Well, obviously, we're delighted to be #1 again. That's superb. But obviously, we're not complacent, particularly as we look into what is a very, very challenging environment at the moment. I think it's a bit of a perfect storm is an overused word, isn't it? But if you think about the inflation that we're facing into, that many insurers haven't seen for a long time, the cost of living crisis that is obviously making things very challenging for our customers, the pressures that are on our agents, because obviously they're getting some unhappy customers calling up about quite significant price rises often. So it is a very, very challenging environment. And then if you look at the macroeconomic environment, still not great. We're probably facing into a change of government. So there's a lot of things that are up in the air at the moment, which makes it extremely challenging for everyone, and insurers are no different.
Absolutely. I mean, Anna touched on it there, Hugh, but we're obviously in a very volatile market environment at the moment. I mean, what do you think are some of the biggest challenges facing insurers at the moment?
Well, all the things that Anna mentioned, but I think what's been very challenging about the period over the last couple of years has been the combination of so many adverse factors. Yeah, insurers are used to dealing with tough claims years, dealing with difficult macroeconomic circumstances, dealing with market volatility, dealing with banking failures and challenges in the wider FS ecosystem, dealing with the challenges of digitalization while maintaining high levels of customer service with your existing systems. All these things are not new. I think what's been particularly challenging in the last couple of years has been how many of these things have been happening at the same time. The reduction in reinsurance capacity, also a major factor for the market to deal with, not least because of COVID. The disruption to the workforce and ways of working as a result of the pandemic. I think most CEOs I've spoken to have just found the sheer range and combination of those to be the biggest challenge, rather than any one of them in particular, most of which they'll have dealt with at some point in their career. And I think as a result, there's been a big focus for firms on ways of working. How can they work in a more agile way to try and deal with quite so many things that are all happening at the same time? There's been a big challenge for firms to keep up investment in digital systems and modernizing systems that they need, at the same time as trying to strip out cost because of the macroeconomic challenges that Anna was facing. And of course, the need to retain talent at a time when we're living through a change in the ways in which workforces operate, and some quite different requirements of firms from some of our younger colleagues. So it's a sort of fascinating picture, but certainly a very challenging one for the CEOs who are running the major firms.
Certainly not an easy market to be operating in at the moment. Absolutely. I mean, Matt, if I could come to you next on that same question. I mean, what do insurers maybe need to be aware of in this volatile market? What's important for them to consider?
Yeah, I think sorry, I think Hugh hit the nail on the head there really when he mentioned agility, because I think with so much volatility in the market, no one can really preempt every scenario. No, there's going to be something that happens that no one just expected, coming down the line. So I think insurers need to be able to react to that quickly and make the adjustments that are needed to almost get themselves back on the right heading. Strategy is great for setting that North Star, that target they want to aim for. Obviously that's an essential part of any business. But with so many crosswinds in insurance at the moment and how that's affecting market dynamics and customer behavior, I think being able to make kind of small incremental adjustments, that's vital for long-term sustainable success, really. And this means that insurers, almost they need to keep their finger on the pulse of how the market's performing and how their competitors are responding to that as well. And that's not just things like underwriting performance, as we covered in the top 50 insurers. It's also around tracking market performance on things like solvency positions or customer experience and complaints handling. That's just as important, even in some ways almost more important, particularly given the new regulations we've seen. And we try and help our subscribers with that through our market intelligence platform as well.
Okay, yeah, that's I think a good overview of the things to consider there. I mean, one of the specific ones that came up, as you know, Matt, when we were putting together the top 50 insurers, was rampant claims inflation. I mean, that's a result of all of the issues that we've all just touched on there, but also the kind of wider economic landscape and the instability created by the geopolitical climate, which you mentioned, Anna. But Hugh, how does an insurer manage operating in such a tough environment?
I think it's shown a spotlight on an interesting way in which the market is, to my mind, developing, which is that it pays to either be a scale player or a specialist player. I think the current situation has been hardest for those players who are in the middle of the market, who do a little bit of everything, and have found it therefore difficult to be able to invest the level that they need to invest in new systems and new propositions and make the most of what the digital revolution offers. But are lumbered with many of the costs that Anna described in her opening remarks, particularly around claims inflation, pay inflation, and energy costs, just to name sort of three of the factors which firms have had to deal with. Never mind, the huge challenges around some of the supply chains that the industry relies on to be able to sort of remediate situations for customers. So I think it is definitely therefore been easier for the bigger players to handle because they're organizations of scale. They can benefit from economies of scale. They can have more leverage with their suppliers when it comes to preferential rates. And they have been able to, I think, strike a better balance of continuing to invest in the things they need to have a business in the future, continue to manage the regulatory compliance costs, which have grown and which I'm sure we'll touch on at some point during this call, while at the same time managing their costs effectively. And I think, where we've seen some particularly dramatic combined operating ratios in the market, they've often been with players who've just not quite had enough scale to be able to sort of navigate some of these challenges. Equally, for much smaller specialist players, well, they can be a bit more nimble at times. And if you only do one or two things and you do that really well, then that can sometimes be a source of protection in a what's otherwise quite a tough market.
Absolutely, that's a really interesting perspective. I mean, Anna, you yourself don't happen to be one of those mid-level insurers that struggle with scale, but I mean, from your perspective, how difficult are those current conditions, and what are you doing to combat them as well?
Yeah, I mean, I think Hugh's touched on a lot of the issues that we face into every day. I think that it's not just about inflation per se, although that is a very significant challenge that every insurer is facing into. And you're right, where you do have scale and you can drive some better results through your supply chain, that's clearly an advantage. But what we're also seeing is the lag. So, for example, it's not just about CPI happens to be turning now, but we're not seeing that necessarily coming through in some of the claims cost at the moment. So you've got this slightly odd situation where you've got perhaps a lag coming through, which is still influencing your pricing. I think the key things that you have to be really good at are around communication with customers and your own colleagues. We know that we've seen lags in terms of repairs. It's taking longer to get cars. Key to key time has gone out. Lots and lots of challenges from the macro macroeconomics, from the supply chain challenges, from COVID, from ways of working, that are translating into unhappy customers because effectively they're not getting the service that they expect, and not because of what we are, we're not trying to sort of make life more difficult for them, but it can be very, very challenging to get the end-to-end process working really effectively. So I think focusing on communication, even when you can't deliver that service exactly as the customer might want, keeping them informed, keeping them up to date, can often provide a better outcome than just, shrugging your shoulders and hoping that the customer won't complain too much. But it is the perfect storm, as I said at the start. It's lots of, it's multifactorial, everything's hitting you at once. So I think it's going back to basics. How can you price really transparently and really clearly? How can you price nimbly? Matt said you have to look at what's happening in the market. You have to be responding to what your competitors are doing. And you have to be looking really closely at your own data. Data is key. What's it telling you? Are we seeing particular spikes in certain areas? Are there particular perils that are driving particular challenges? And you have to know that really fast from your claims data, and then you have to feed that back into your pricing. And I think the players that win are the ones that can do that really effectively, really speedily, whilst also maintaining that laser focus on customer service, because we're here to service our customers. We're here at the moment of truth. We're here to pay out when their claim comes in. We're here to support them when something horrible happens. So you need to make sure that you're pricing it right and that you're delivering that great customer service. It sounds so simple, doesn't it? But actually, against the backdrop of everything that we're doing and everything that we're facing into, that is definitely a challenge for all insurers.
Absolutely. I think walking that balance is a really important thing to note there as well. And absolutely, as a consumer, being informed is absolutely what you like if you're not going to be delivered the service you expect. And yeah, I can see how that's important. Matt, coming to you on the kind of impact of claims inflation and the economic volatility we're seeing at the moment. I mean, what impact has this had on the different lines of insurance, particularly around that demarcation between commercial lines and personal lines as well?
Yeah, so we looked at this in the top 50 report, and personal lines been hit really hard over the last 12 months. I don't relish kind of Anna's job at the moment. It must be a tough one to be doing. That the home and motor market, have particularly borne the brunt when it comes to claims inflation. And when we looked at the numbers, that those personal line specialists reported kind of a loss ratio of 64.1%. for 22-23, up from 56.8 and 52.6% in the previous 2 years. So, personal lines insurers are paying out almost 2/3 of premiums in claims last year. Net claims incurred were up 22% to almost £6 billion, while premiums only rose by, by 8%. So, it's a real, tough market when you're facing that level of claims inflation. Commercial lines insurers, meanwhile, had an aggregate loss ratio of just 49.7%. That's down on previous years when it was 50.7% in 21-22 and 59.2% the year before that. Those lines have benefited particularly from a rapidly growing premium base as well. Personal lines insurers did, however, report a lower expense ratio than their commercial peers. It's probably to be expected given, the way that business is sold. But that meant that personal lines insurers still reported a COR of 100.1%. There is maybe some solace from, the rise in premiums that we've seen. And as Anna was saying about maybe CPI starting to come down a bit. But, obviously, as she was saying, that there is going to be a lag. So there's definitely still tough times ahead. Look at the COR for the commercial market. That stood at 85.9%. So, really in profitable territory, although we do see a lot more volatility in that commercial market, again, given, the types of risks that they cover as well.
Yeah, absolutely. I think that demarcation is always an important one to look at, especially with the volatility going on. And it does seem to be falling largely onto the personal lines section there. But as you say, volatility never goes away. All of that is really interesting conversation. But what the top 50 insurers report showed us was that, despite all of these challenges, there are insurers that are making quite large successes. AXA among them, maintaining its top spot. But I think that's important to talk about, is that what it does take, despite those conditions, to become a best-in-class insurer, especially in the current year that we're operating in. Hugh, would you like to speak to that at all? What is it that makes a best-in-class insurer in 2023?
I think there are a couple of characteristics you can usually see in high-performing firms, not just in the insurance market, but in the wider FS and corporate market. So I'd pull out a few things. Firstly is leadership. Firms that are well led usually perform better than those that are not. To state the obvious, but it's easily to overlook. And what does leadership mean in that thing? I think the value of good, shrewd commercial judgment in a tough operating environment is more important than when times are good and when everyone's making money. I think the importance of values and culture that foster the type of team working that Anna was talking about is really a critical role of leadership. Culture starts at the top, as we know. And in difficult working environments, leaders who are able to inspire, encourage, and find ways to get their teams to work together in different, more agile ways can help create much more high-performing organizations. I think there's a couple of other areas I'd flag as well that I think the best-in-class firms share. The first is a mindful approach to reputation. We live in a world of social media and where reputation can be very quickly harmed, if not destroyed, by sort of poor handling of individual issues. We've probably seen that in the FS sector this year in some cases. And so firms that are doing well tend to be very mindful of the sort of that environment and manage their reputation very carefully and have risk controls across lots of different ways in which that help them do that, and that are focused on product delivery, because as Anna said, at the end of the day, you've got to have happy customers who want to buy your products. So for me, leadership, reputation, protecting what you've got, building on it, product delivery, and finally evolving for the future, because it's no good being best in class 1 year if you're redundant in 10 years time because your business model doesn't work or because the products you're selling nobody wants to buy anymore. And we are living in a world that is changing very rapidly in terms of population growth, digitalization, climate change, urbanization, and the effects of all that on the products that our market insures are quite profound. So firms that I think are doing well are those firms that are investing, albeit prudently, but are investing in new products in the motor market, for example, around that can work as part of an embedded insurance proposition, omnichannel propositions that allow the customer to deal with you equally easily, whichever way they choose to do it. Obviously, electric vehicles in the motor market. Those are just examples of the ways in which products have to develop to meet the sort of changing world and the changing customer class, including those customers under 35 who are typically have a very different outlook on what insurance products they want to buy and how they want to buy it from those of us of perhaps a more senior vintage who are in the positions of leadership within the industry.
Absolutely. I mean, to come to you, Anna, as well, I'm sure you'll echo a lot of what Hugh said there, but from your perspective, the same question. I mean, what does it take to be the top performing insurer in our report this year?
I agree with huge amounts of that Hugh has said, but I think for me, I would perhaps add diversity. I think having a diverse outlook, having a leadership team that isn't perhaps, quite what it was maybe 20 years ago, and actually bringing that diversity of thought, diversity of feeling, anti-group think, let's bring in some people that can bring us that diversity of thinking that will help us evolve all of the things that Hugh's talked about, including our products. I think agility, you have to be speedy, but you have to do it in a mindful way, because knee-jerking and perhaps reversing decisions, particularly when it relates to large-scale investments and digitization, can be very, very expensive. So I think making sure that you're building, whether it's systems, platforms, product suites that you can amend, tweak, change to meet changing environments. I think that is also incredibly important. And I would also say investment in people. So again, we're only as good as our staff, and it doesn't all, the CEO can't do everything, right? So we've got to make sure that we've got that whole culture of customer service, agility, friendliness, all of the things that people want, I think, right through the organization, so that the person that you're speaking to, if you choose to speak to someone, is responding to you in the right way. AXA have invested quite heavily in omni-channel. We've launched our new digital only brand Moja for exactly the kind of sub 35 group that Hugh was talking about, the people that live on their phones, the people that want to do everything that way. But equally, we had an interesting interesting outcome of that, in that people are perfectly happy to buy and change and do everything on their phone, but when they make a claim, they still quite like to talk to somebody. And it's really interesting, just that, particularly if you're quite young, you might not have made a claim before, and therefore there's that sort of nervousness about it. So really being clear about what digitization means and how you might have to show up for your customers in very different ways depending on demographic, type, etc. But yeah, look, as I've said before, it's never a dull moment, right? You can't stand still. And although AXA is delighted to be number one, we can't be complacent. We've got to make sure that we're continuing to evolve, continuing to develop, so that we can continue to service customers who will want different things and will want to cover different aspects of their lives as we go forward.
Absolutely, I think that's come through quite clear, and that AXA is a company that is making sure that it's keeping abreast of what's going on in the market, and I think that's a very important thing to emphasize in staying on top, but also reaching it, is that you need to be responsive to your customers as well. And we've got a question from the audience that I think would be quite good to bring you in on, Matt. So they've said that the stats that you're providing about the cause of personal lines versus commercial lines are very interesting, and are those available after the webinar? And they are already available on the Top 50 Insurers report. But Matt, maybe it'd be good if you could just give a quick summary of what we found about what the same question, but with reference to the report.
Yeah, sure. So I suppose kind of the main finding from the report is that kind of we spoke about it earlier, AXA holding on to the top spot with GWP of 5.6 billion this year. It's the third year running that they've been named the largest insurer in UK GI. Gap to second place has closed slightly, with Aviva reporting GWP of 5.4 million. And then you have Allianz remaining in third place with premiums of 3.9 billion. Across the whole of those top 50 insurer groups, there was an aggregate COR of just over 100%. So kind of, falling into an underwriting loss, amidst those, tough market conditions we've already spoken about. And this compares to COR of 97.1% last year and 98.2% the year before that. But despite this drop in performance, there are some bright spots, and there's a number of companies that we've recognized as outperforming the market, and each of these have been awarded an Insurance Data Lab Gold Award for that underwriting performance. So we rate this underwriting performance across all non-life UK and Gibraltar regulated insurers, as well as the Lloyd's syndicates. And this year's edition of the Top 50 has been included in our ratings for the first time. So it's been great to have those in there. So thanks for that, Insurance Times. And the rating is essentially a weighted average of the scores that we calculate across three different pillars. So that's the most recent COR, the improvement in the COR over the last 12 months, and then the 3-year aggregate COR as well, just to give a bit on kind of that longer term performance, as Hugh was alluding to earlier as well. For Lloyd's syndicates, instead of using the COR, we use the underwriting result. That's just because of the way they report their results, essentially. And for UK insurers, FM Insurance has been named the top underwriter in the UK with a rating of 92% for 2023. It's up from 69% a year earlier. Other Golden Award winners coming from the UK this year are Score UK, which are actually the highest rated insurer in the top 50, with FM Insurance just missing out on the rankings there. And also Arch UK, Star International Europe, Berkshire Hathaway International, International General Insurance Company UK, and Fidelis Underwriting. For Gibraltar, it was Nelson that came up on top with a score of 78%. And that's joined on the list of Gold Award winners by Acaster European Insurance, WDP Insurance, and Argus Insurance Europe. And then in the Lloyd's market, it's the Hiscox Managed Syndicate 33 was the best rated syndicate with a rating of 75%. And the other top performing syndicates picking up a gold award this year are Lancashire Managed Syndicate 2010, Aspen Managed Syndicate 4711, Astor Managed 4242, Aegis is 1225, and then the Chubb Managed Syndicate 2488. So, while there are tough market conditions, there are, still opportunities out there for, growth, for growing that premium base, and also for delivering underwriting results as well. So yeah, not all doom and gloom, but yeah, definitely a tough market to operate in.
Absolutely. And I'm not doing this deliberately to follow on from you saying doom and gloom, but I thought we could maybe move to regulation next. And I know that's the thing that came up when we were kind of putting together these reports for each company. And Hugh, I wondered whether, we've spoken about some of the kind of economic conditions of the market, but that's regulation is a challenge, especially this year, that lots of insurers are facing up against as well. I just wondered whether, is that a problem that they're facing, and what issues have been presented?
Well, there's a flippant answer to your question, Yanis, which is, none of us have ever been on a webinar or conference ever where insurers haven't moaned about regulation, never mind the brokers. So yeah, there's this is a hardy perennial sort of answer. But I think what's interesting on a more serious level is I think there's two quite profound changes you can see on the UK side in the regulatory environment, and two quite profound ones coming from the EU. On the UK side, the consumer duty is a game changer, that we've repeatedly advised firms to take it seriously. It raises the bar from what was previously a sort of fair outcomes with lots of additional requirements through things like IDD and the fair value regime to one that requires good outcomes that are underpinned by systems and data and that are attested for at board and C-suite level. And whichever way you look at it, that is a raising of the bar, and it's a raising of the bar across the market. And it takes the conduct regulatory regime much more emphatically into the SME and mid-corp part of the insurance market, which previously, was less of a focus for predecessor regimes. So, the consumer duty is a significant change, and all firms we would always advise to take it very seriously and to view it as an ongoing and iterative process. We're only just at the beginning where firms have done their processes for day one, which was on the 30th of July. We're now in the process where the regulator expects them to continue to evolve those systems to become more sophisticated and mature over time, particularly in terms of data that is drawn from the business. And that expects sort of rapid remediation of issues that may arise as a result of that data flow. So consumer duty is very important. And I think in the UK environment, what's come with that has been a greater focus on brokers in the intermediary market from the FCA. When I was running the ABI 4 years ago, the FCA published its report saying, well, we don't think there's anything to see in the broker market, to sort of condense the report. But that's pretty much what they said. That, over the last 18 months or so, particularly as a result of their focus on how the leasehold market operates, I think you've seen a change in shift. You've seen a change in shift with a much more piercing view at how the broker market operates, a much greater focus on transparency and on how remuneration practices work, as well as just this recognition about the consumer duty applies to you brokers as well as the carriers. So, you've got to meet the consumer duty, and we've got all these other questions about some of your business models and the way you operate. So those would be the two things I would pull out in the UK market. Just briefly, two things that are coming more from the EU side of things, which I think are equally important for businesses who have EU operations. Firstly, the DORA regulations around operational resilience, which very much mirror, by the way, the PRA and FCA's focus on operational resilience, a recognition that to run a modern insurance company requires a huge number of third parties, a lot of third party reliance, both in terms of front facing customer delivery and back office service data management systems management. So a much greater focus in an era of growing cyber threat on how resilient are those processes and what happens if one of them falls over. And finally, the ESG requirements, particularly the CSRD requirements coming from Europe, for which the data has to start being compiled and used in 2025, ready for reporting in 2026. Firms have to start building those systems now to be in a position to collect that data in 2025 and report it in 2026. And that is the beginning of a much more profound shift where ESG shifts from being a sort of set of voluntary requirements with firms having quite a high degree of discretion about how they report things into where we are going, which is a much more mandated regulatory environment with a much more standardized set of requirements, where if the firms don't have the data in a way that works with the regulations, they have to build new systems to be able to create the data that fits the requirements of the directive. So I think that's something that firms really have to be keeping an eye on. So those are the four areas I'd draw out amidst, what's always a noisy and challenging regulatory sort of environment.
Absolutely. I mean, even just pulling out the headlines makes it sound like there's a lot going on. So I dread to think of your job, Anna, of actually, implementing these into a company. Maybe you could speak from with your AXA hat on, Anna, about how, you have responded to regulation and the challenges it's presented, but also kind of the opportunities perhaps that Consumer Duty has presented to the company, to the industry.
Absolutely. I mean, I think with all of these, you can go two ways, right? You can moan about it, and plenty of people do, or you can embrace it and see the way that you can actually improve your service to your customers and improve the resilience of your organisation. I'd like to say that people would do it off their own back, but sometimes maybe we all need a little bit of a kick to make us do some of this stuff. On Consumer Duty, I mean, obviously we were compliant by the deadline, as you would expect. We're a large insurer, we take these things very seriously. But yes, it is a point in time, and the evolution is as critical as the starting gate. So we got ourselves ready. We've got some brilliant insights. We would say I think that we were doing a lot of the things that Consumer Duty expected already. The difference is being able to prove it and prove it with reliable data that then comes through in a format that is reportable and actionable. So it's all very well finding out that you're doing something that might be causing customer harm. It's right, how quickly are you acknowledging it? How quickly are you remediating it? And I think that is the step change, really. It's really making sure that we're driving those feedback loops and making sure they're all in place so that we can close problems, make sure that we're addressing issues that arise that we get the data from in relation to our customers. Operational resilience, my old job was Chief Operating Officer. So, operational resilience, third-party reliance was something that was part of my day-to-day and my bread and butter, and was always a concern. You've got control over your own environment to a point, and a lot of us are facing into very similar challenges around aging tech, technical debt. How do we make sure that we really make sure that we are super resilient? But then there's your perimeter, and then there's your third party. So how can you really make sure that you can be super, super sure that you're going to have the right kind of response if something happens in a third party supplier. And that's not just through the claims supply chain, for example. That could well be through your telephony service or your cloud provider or whatever. This is a multifaceted now. No insurer has got everything under their own roof, I don't think. So we embrace it. It's not without its challenges. I think that the big day-to-day issue for most insurers, I think, is the sheer amount of investment spend that regulatory response ties up. And again, we shouldn't moan, we have to do it. But I think it's then being really, really smart about how you ensure that what remains of your discretionary spend, if you like, is put in the right place. And it goes back to what I was saying earlier about building that agility. And ironically, that probably also helps with things like Consumer Duty compliance, and it also helps with resilience, because you're building modern tech stacks that can actually, you can scale and you can do new and improved things without having to change everything at the base level. So regulation's not going away. I think we have a very interventionist FCA and PRA. I think that they hold us to account, as they should. That means that customers can rely on the UK insurance sector. We're there for the long term. We're there to pay the claims out. That is part of the price of doing business. And I think we just have to face into it and make sure that we're responding in a proportionate way. And I think that, from the conversations I've had recently in my own close and continuous discussions with the FCA, they are definitely focusing on certain areas, particularly around customer value. They're still focusing very heavily on GIP. We're 18 months, almost 2 years into the GIP regime now. It's not acceptable to say that you've just got, pockets of your book that are not, being shown as being equivalent new business price. So, there's the new stuff, but then there's the embedding of the old stuff. It's not going away. So we better just suck it up and make sure that we're responding appropriately.
Absolutely. I mean, it's both iterative and also a step change, and we've got to kind of deal with that at the same time as you say, kind of the implementation of old regulations. Technology is a big one that you mentioned there, and that really does help with kind of implementation, especially of Consumer Duty, where there's a new requirement for evidencing lots of things. That leads in itself quite nicely to what I wanted to ask about next, and we can move away from regulation because we could talk about it for the next 2 hours, I'm sure. But into this challenge that was mentioned at the start, which was attracting and retaining talent. And I mean, technology is perhaps one area where the insurance industry is changing quite dramatically. But Hugh, would you maybe like to speak to how you think the skill requirement of insurers is changing and how that's creating challenges around the issue of kind of talent attraction and retaining?
Yeah, I mean, I think it's work in progress. I mean, there's a couple of things I would draw out. I mean, clearly, I think we can all see that over the next decade, the industry will proportionately employ more technologists, more data scientists, more digital specialists, whether they're specialists in digital marketing, digital commerce, that side of things, and more people in information security. We can see that trend, and it's already happening, and that will grow. What I think will happen, I think the big challenge for that, and Anna mentioned this earlier, is around diversity and inclusion, because we already have a problem in the industry that although we recruit more women than men into the sector at graduate level, we lose the majority of them by the time we get to C-suite level, and we have a particular problem in our sector with women not returning to the sector if they have children. And we know that's a problem. It's an area we put some focus on when I was leading the ABI. And we have an even bigger problem if the cohorts and the skill sets that we are recruiting from increasingly have their own gender imbalance, which many of these areas do because of this country's problems with STEM and with women doing STEM subjects at university and A-levels and so on. The pipeline is slowly improving in that, and I know it's a focus of this government and of the opposition, but nonetheless we have a quite a significant challenge there, that the people we need to recruit more will make some of our diversity and inclusion challenges harder. And I think that's something as a sector we need to face into and recognise and call out if we want to try and sort of proactively do something about it. More generally, I think that one of the interesting things is that as a sector, and particularly in the GI sector, we've historically operated a bit in silos. You have claims specialists, you have actuarial specialists, you have underwriters. And what increasingly I think you see across the market, and this is a feature of successful firms and goes back to the earlier discussion about agility, is that firms that I think are equipping themselves better for the future are trying to collapse those divides. Of course, people can have domain expertise and specialist knowledge and specialist background. It's important in all those areas. But the more that actuarial colleagues, underwriting colleagues, and claims colleagues work together in multifunctional teams, together with some of those new disciplines in e-commerce and e-marketing, I think that will make for a more successful mix for insurers going forward because of the challenges that we've been discussing on this panel.
Absolutely. I mean, I think, again, Anna, you'll probably echo a lot of what Hugh said there, but from your perspective, sitting at the top of AXA Retail at the moment, I mean, is that something that your insurance firm is kind of dealing with? Are these changing requirements for talent when you're employing and trying to retain talent as well?
Absolutely. I think all insurers are facing into it, and will all respond in slightly different ways. But we're looking particularly through, it's not rocket science, but things like intern schemes and grad schemes. So widening the talent base. Insurance has an image problem. Hugh will know this from his time. It's endlessly fascinating. I'm a bit of an evangelist for a lot of this. The sheer variety of roles that you can experience in an insurance company, the technical rigor, the intellectual rigor, that is required is very strong, but yet it is not seen as a sexy place to work. So I think we do have a bit of an image problem with that. We definitely have a diversity problem. I think like a lot of FS, to be honest, but I think banking have probably done more than we have. We're belatedly catching up. But today, I'm actually in a venue today where I'm at our inclusion conference today, which AXA runs twice yearly. Really just trying to make sure that we're appealing to a wide base of people, making sure that we're making people feel comfortable with who they are and they can bring their whole self to work, and all of that. They feel like buzzwords, but they're really important. If you get them right, it is a game changer. But some of the issues we can't solve, as even as an insurance community. It comes from schools, it comes from how we're feeding in, how we're doing the sort of STEM push that Hugh talked about. And I think what's equally important, it's not just about diversity from what I'll call some of the more established lenses, whether that is race, whether that's sexuality, whether that's gender. But I'm particularly keen on things like social mobility, which I think has dropped off a cliff. And I can say this as, I'm one of those cohort that was the first of my family to go to university, came from a working class background. I think that the kind of opportunities I had, I can see closing, which I find really, really worrying. So I think looking at diversity in its broadest form, knowing that there's massive talent out there that might not be coming through the usual routes. And we do a lot of work, whether that's through business in the city, whether it's through mentoring, whether it's through going back to schools and sort of encouraging people even to think about insurance as an entry-level job. job and then working up. And the final point I'll wholeheartedly agree with Hugh is about multidisciplinary teams. You know, that is the way forward. That is the future. You know, we need all of our best brains coming together, the claims specialists, the actuaries, the underwriters, you know, coming together to really understand, as we were saying earlier, the data that we're getting and what then we need to do to respond to make us agile and profitable in this very challenging environment. And then all the new skills that, again, I think retail in the wider sense and banking have had for a long time around really great UX, really great CX, you know, that kind of experience, so that when you're on a digital journey, what you're getting is something really rich and something really powerful and helpful. Again, we've been a bit lagging in that as well, but I think there's, you know, some really great examples of that now. And I would say Moda is one of them. Actually, it's a really clean, beautiful digital journey. You know, that is quite unusual, I think, in insurance. It's still quite clunky in places, and it's not what people expect. So lots of challenges again to face into, but I do feel positive in that I don't think that D&I is a buzzword in insurance. I sit on quite a lot of sort of round tables, and I go to a lot of events, and I think it is something that people have really doubled down on and are very keen to demonstrate is something that we live and breathe within insurance. And I'm very proud that's what we do in AXA. But yeah, lots of talent out there. How do we tap into it, and how do we make sure that people appreciate the breadth and depth of experience that you can get in an insurance company and the kind of opportunities that it gives you?
Absolutely, and I think it's quite encouraging to see, you know, leading insurers really taking this issue by the horns and really trying to lead on it. I think it's impressive. I mean, that one thing you touched on there was kind of integrated teams, and I think that's particularly interesting, kind of given the, I'll say explosion, but maybe I don't mean that, of AI and machine learning in the sector, and how that's kind of being deployed, I guess, not just in the insurance sector, but across financial services and other business. Matt, with that explosion and the changing skill base that it kind of brings with it, what do insurers need to consider when they're also looking to attract talent to the business?
Yeah, I suppose, you know, there's lots of benefits kind of, you know, for insurance, for insurance companies, you know, introducing these, you know, new technologies into their business, whether, you know, driving down costs or, you know, helping them to better price risk, that kind of thing. But I think it also has, you know, great benefits for the workforce as well, as long as it's, you know, introduced in the right way. I see things like AI, machine learning very much as an enabler for existing workforce and, you know, new talent down the line as well. It's not, or it shouldn't at least be used to replace, you know, kind of roles within an organization or replace, you know, certain functions. It's more like a toolkit to almost kind of, you know, supercharge staff so that they can perform their roles better, giving them the tools they need to get rid of, you know, the boring, mundane, you know, more manual elements of work, and instead, you know, freeing them up to do the stuff that really adds value to the process, adds value to the customer experience, and adds value to the business as well. And as well as being great for, you know, for the business and the customer, this can also help, you know, increase job satisfaction too, you know, increasing retention rates. People are being more challenged in their role, given more interesting, you know, problems to grapple with. And I think that can also then be used to sell insurance as a, you know, more appealing, you know, career choice, because, you know, especially, you know, we were talking earlier about integrating teams and, you know, having a more varied role. I think that, you know, can be great for attracting talent as well. So done in the right way, it not only, you know, benefits the company and the customer, but it can also, you know, benefit staff as well, and, you know, really amplify, you know, the attraction of insurance, and, you know, help companies to retain their staff as well.
Absolutely. I mean, expanding on that, you've touched on it a little bit, Hugh, in terms of the D&I and the importance of it, but specifically with this implementation of AI and new technology, does that present new challenges for, you know, talent attraction and diversity and inclusion within the sector?
Well, I mean, I was amused when you said there'd been an explosion of AI. I think there's been an explosion of hot air about AI. I'm not sure there's been an explosion of actually using it, but yes, I think it does. And this connects into what Anna was saying about how we can attract people from different backgrounds and go back to what used to be one of the insurance industry's most outstanding characteristics, which it was a place that bright 16-year-olds could come who didn't want to continue in school. And, you know, a lot of the Lloyd's market in particular, its historic pedigree was built upon those really bright, smart, numerate youngsters who joined the market at 16 and went on to, you know, lead that market and be hugely successful. And we have lost some of that, which I think is why there's been a renewed focus on modern apprenticeships in particular for all the flaws with the way in which the scheme operates. Yeah, and certainly KPMG has found as a firm that, you know, we are recruiting a lot of trainee auditors now and consultants through that route. And it is, you know, making a significant difference on our social mobility metrics. And these are people who simply cannot afford to go to university for 4 years, incur huge amounts of debt, which they will be living with for the rest of their lives. So I do think there are, you know, it's a really important point. But then in terms of, well, what do we get them to do? And I think there's some really interesting thinking of all places from Davos talking about hot air, but actually they've done a really good report, the World Economic Forum, on future skills. And they talk about the way in which a world of increasingly automated processes using first generation AI, not generative AI, but the AI we've all been living with for the last 10 years or so, means that more and more people will have to have creative skills and they will have to have assurance skills. So in terms of what's the sort of, to link the 2 points together, I think there's something there that we can say to people, you know, for example, as we do to people potentially come in as trainee auditors at 18, you're not going to be spending all your days like doing fine, really fine little granular work, which, you know, is, you know, even the most hardened auditor would not say is the most interesting aspect of their job. Yeah, and you've got to do 4 years of pain to get through. What we will be saying, what we are saying increasingly as a firm is, look, the future of audits are that large amounts of the grunt work are automated. And that way they're 100% accurate, or they're 99% accurate. They're not 90% accurate with a human error rate of 10% because people working 18-hour days make mistakes. So what do? You can come in and assure this work, make sure that it meets certain standards, run certain tests on it, and you can problem solve on the issues that arise from these sorts of automated processes. Take consumer duty, for example. We've had a tool on consumer duty that firms can run huge volumes of customer documentation through that then identifies areas where the documentation is unlikely to meet consumer duty rules in terms of clarity to customer and plain English requirements. Well, then the offer to a potential employee is to say, you can come in and help solve that. You know, the computer will tell you what the problem is. You can then work out ways in which you can communicate to a whole range of customers, including much younger customers, in language that they will understand, and add that value to the something that the machine has done to start with. So there are ways to join the two parts of the conversation together, I think, in which the skills of the future will be much more interesting for people, including some of the younger people and some of the people from more disadvantaged backgrounds who we want to attract into our industry, because we will be able to offer them more interesting starter level jobs than they might have done just coming in, you know, 5 years ago, when so many of these manual processes were not automated. That to me is more of the excitement around what AI can help us do than some of the slightly more, excitable chat about sort of Gen AI, which is quite problematic actually for insurers, because one of the things we have to do, and you know, this would have been central to Anna's previous role when she was talking about being the COO, is protect our customers' data. And one of the problems with generative AI is it pulls lots of data and lots of information in order to do the generation. And we've got to be really careful about that as an industry, because we are the custodians of hugely sensitive data for our customers. So, you know, we actually have to be quite thoughtful about how we approach Gen AI, but AI itself offers huge opportunities to do basic processes better and then have more interesting roles for employees on top of that.
Absolutely. I mean, I think that you've touched on a lot of the issues and opportunities with AI there. I mean, Anna, did you want to maybe speak to especially the point around getting apprentices in and how they can help with making sure that companies are equipped with the right skills that they need to operate in a new environment? I mean, how does AXA approach that challenge?
Yeah, I think Hugh's right. I think years ago, insurance was a route in for bright youngsters who didn't necessarily want to go what we would call the sort of traditional academic routes. And I think we almost have to sort of, it's not often you say we need to get back, is it? But I think sometimes maybe we do need to learn from some of the things we lost over the last 20 years or so. I mean, I think apprenticeships are one way. It's not without its challenges, as Hugh says, in terms of a scheme. But the idea is right. As I said, we also do internships. We did some very successful internships over the summer. great bunch of, first year university students actually, but they were, again, just exposing them to everything that an insurer can be, really opened their eyes, and they've been hugely vocal advocates for us, sort of back amongst their friends, and perhaps that's the kind of getting in at the entry level for people to understand that insurance isn't boring at all. It's actually endlessly fascinating. But I think, I'll also touch on the AI side. I agree with Hugh. There's a lot of talk and not a lot of action. I see real opportunities for it to take out some of the drudgery, exactly as Matt was saying, some of the boring stuff, some of the kind of repeat work, some of the things that actually a computer will do better for you than a human being will do. But if the last 10, 15 years is anything to go by, there will be roles in the future that we don't even have names for yet. So the one I came across recently was a prompt engineer, I think, which is, for generative AI, asking the right questions to get the right outcome is actually a skill in itself. It's not like, it's not Star Trek. You don't just say, computer, please do X, and it will do it. You have to ask the right questions in the right order. And finally, I completely agree about customer data. We can't just keep sticking things into ChatGPT and asking it to do stuff for us. That is hugely dangerous. My data protection officer would be having an absolute conniptions, if we even suggested doing anything similar. So Active is building some of its own sort of ChatGPT enabled capability, but held on data that we've got, completely secure, and that is just our data and is not pulling just generally from the internet. But of course, that comes with its own limitations then, right? You don't get the whole thinking power of the internet since 2019 or whatever it is that ChatGPT actually pulls on. So I think the opportunities are great. The dangers are equally great. Our regulators, sorry to go back to that, will not be happy if we start doing things with data that we're not permitted to do, or that they might see as being of advantage to the insurer and not to the customer. But I equally see some fantastic opportunities around hyper-personalization, around avatars that can answer questions for customers, and again enabling our people to answer questions in a much more targeted and more accurate way, because they're not having to read through a whole ream of stuff. The AI might point them towards a particular clause in a policy or a particular advantage of a product without them having to hold it all in their heads, which when you have a broad product suite can be challenging. So massive opportunity, massive risk, but I think this is bread and butter for also this new generation that's coming through. They are the digital generation. People like me are far too ancient to be completely sort of au fait with all of this. So I think we have to tackle attracting that kind of talent, because they're the ones that are going to be delivering the super services and super products of the future, and we need to attract them into our industry.
Absolutely, I think that's a really nice segue into the next question as well, which was about opportunities more generally. And I think AI is absolutely one of them, I know, as you say, albeit without the tightrope walking of making sure you do it properly. But Hugh, maybe if you could speak to that, maybe about the opportunities that you see for insurance companies in the current market, despite the volatility and the challenges that we've spent the last most of an hour talking about.
Yeah, a couple of thoughts just to sort of hopefully end on a slightly more upbeat note. I mean, and we've already touched on, the opportunities, I think, to improve the type of people that we attract in and play a part in social mobility in particular. A couple of areas. I mean, the first is, anything that helps the customer experience go better is a good thing. And as an industry, we have struggled with customer service levels for many years because of quite ancient legacy systems that make it hard to do things. So at a simplified level, I think, the way in which the adoption of good digital technology, cloud-based systems allows for quicker remediation and resolution of claims and quicker customer service is a good thing. My caveat with that would be the importance of omnichannel, because I think it's really important that the industry doesn't go down a route where the firm decides that you can only deal with us one way. And I've had experience of this in the last sort of weekend, which obviously not without naming the insurer, where I was trying to speak to somebody about something in the policy document I just did not understand. And could I speak to somebody? No. I was constantly bounced around and constantly kept getting recorded email. You must send us an email. You must send us an email. I eventually sent the email. The response time was within the 24 hours they'd promised, but it's their 24 hours. It's not my 24 hours. I wanted an answer at the point I was on the phone. And it basically said, oh, we can't help you. You need to ring this number. and it was a different number. And so I think, yeah, it's really important that at the same time as we are making systems work more effectively, more efficiently, we bear in mind that we've got to give the customer the final agency about how they engage with us as the insurer and what they want. And sometimes the customer will want to ring up, and sometimes the query the customer has won't easily lend itself to an email exchange. And sometimes with the claims situation, people just want certainty very quickly, which is why, to Anna's earlier point, they often want to ring up when it's a claim. So I just think we've got to bear that in mind and keep that customer lens on things. But the general opportunity to do things quicker, more responsibly, speedier is number one. The second thing is, I think, the opportunity to insure areas that have previously been uninsurable because of quite crude data, which is being improved all the time by geospatial technology and by some of the models that people can work. I sort of mentor in the Lloyd's lab with sort of startups and technology companies, and a lot of them are focused on how they can improve, for example, modeling of physical risk for flooding. Surface water flooding as opposed to river flooding. We've always been good in the industry at modeling river flooding. We've been very bad at modeling potential value at risk from surface water flooding. So you can see ways in which, as technology becomes more sophisticated and models become more sophisticated, we can potentially start to insure things that previously we would have struggled to insure. And finally, my last point is, the world is becoming, sadly, a more dangerous and unstable place at the moment. And as ever, insurance offers a safety net to firms and individuals in that context. And particularly when you look at cyber and the growth of challenges to information security for businesses and individuals, cyber insurance is a product that we should expect to grow, and where we can play a really valuable and important service to society and the economies of our customers in hopefully helping tackle that protection gap. So those are just three areas: speed, tackling uninsurability, and sort of cyber, where I hope we can make a difference going forward.
Thanks, Hugh. And Anna, did you want to speak to the opportunities that AXA see in the market as well?
I think many of the things that Hugh has touched on, insurers are here to sort of make the risky acceptable. And I think that, enhanced data sets that enable you to be much more specific about risk selection and risk mitigation is clearly vital. We are facing into climate change. It is real. Don't think anyone on this call would disagree with that, despite what some vocal people might say in the press, so we are facing into much bigger risks, particularly in relation to flooding, particularly in relation to extreme weather events. We've got some big rainstorm coming in this weekend, and on the one hand you say it's October, but in terms of the sheer amount of rain it will dump in a very short amount of time, this is all an example of a warming world. So I think that's risk, but it's also opportunity. How do we support businesses? With my wider AXA hat on, we're not just about retail insurance. We have a very big commercial portfolio. We have a health business as well. There's lots and lots of opportunities to really service customers better and help them manage the risks that are sadly growing. And I think, again, showing the value of insurance in this very unstable world is something that I think we should shout about a bit more. Often with the bad guys, we don't pay out on claims, we don't do X, we don't do Y. Actually, we do. We pay on vast majority of claims get paid, and I think just that ability to live your life knowing that you've got a safety net, knowing that we've got your back is really important. So massive opportunity as always. As I said at the top, it's never boring, right? There's always something that's coming. It's always a challenge, but anything that can help us service our customers better and enable them to sleep at night, knowing that if the worst does happen, and sadly sometimes it does, whether it's the collapse of a car park in Luton that happened the other day, we are there to help, and we are there to make things better. So yeah, big opportunities, big risks, but that's what we're all about.
Absolutely, much more tightrope walking again, which seems to be the theme of the conversation we're having today. Matt, would you like to just give your opinions on where the opportunities lie for insurance companies in UKGI?
Yeah, sure. And I hope I don't make people groan with this, but I'm going to bring it back to regulation, because I think we've had some of the challenges it presents, and undoubtedly some of the the requirements and reporting, that kind of stuff does make it tough for the market. But I think there's a real opportunity there for the companies that get it right. So with the ban on dual pricing that we've had, price in personal lines market is not as important as it used to be, given you can't get those introductory discounts for new customers. So I think being able to demonstrate, good customer experience, good customer outcomes, great claims experience, that becomes a lot more important now in terms of both winning new business and also, importantly, retaining business as well. And I think for the companies that can, prove that, as Anna was saying, they're not the bad guys. They are, delivering a great experience, paying out on claims, in a quick way and, efficient way. I think those are ones that could, really grow and grow in a profitable way going forward as a result of these regulations. But the key is getting that message across. And I think within that as well, what people want, Anna said certainty. I think they also want their expectations managed correctly. They're not always going to get the service that they want just because it might not be possible. With the delays we're seeing in the repair networks at the moment, your car could be off the road for, weeks. It's not going to be repaired tomorrow, but not having that, expectation set at the beginning that this may take a bit longer than you're expecting or were wanting, that's key. You can still deliver a good customer outcome, even if it is a bit delayed, as long as, manage those expectations. And I think getting that out in the market, that can help build, rebuild trust in the industry. And for the companies that get it right, it's a real opportunity to grow profitably as well.
Perfect. Thank you, Matt. Again, I think, those are some really important opportunities for the market out there. That's all we have time for today, unfortunately. I think it's been a great discussion and really enlightening to do a little bit of digging around the factors impacting on the insurance sector, especially those insurers that appear in the top 50 insurers report. So thank you to the panelists, Matt, Anna and Hugh, for taking the time out of your busy mornings to join me on the panel. And just like to remind everybody that a recording of this event will be made available for anyone that wants to listen back to it or share it with their colleagues or perhaps play it for their children to get them to sleep. And I ask you to all look out for the upcoming Insurance Times Top 50 Brokers 2023 report, which will be coming out around the end of the month. If you'd like to see Insurance Data Lab's ratings for all insurers and Lloyd's syndicates, or would like to find out more about how they assess performance, you can contact Matt at insurancedatalab.com or apply for a free trial of their Insight platform at insurancedatalab.com. But with all that said, thanks to everybody for attending and have a great rest of the day. You're allowed to go home from work now. Okay. Thank you very much and goodbye. Have a go. It's the rest of the day.
Thank you. Bye-bye.
Bye-bye.
Thanks. Bye-bye.